afternoon, everyone, and welcome to Stock Market Today. You have Alyssa Corum here, and I am joined by Ed Carson on this Friday. And we're going to be taking a deep dive into the technical market action for the stock market this week. And we're also going to be taking a look at Target and Chipotle, Ed.
That's right. And boy, it was a pretty wild week. And we thought last week was interesting, but this one was pretty crazy.
Yes.
And we're bringing over the, this is a daily chart on Thinkorswim of the Nasdaq Composite. And this is the regression line that we've been following. Sort of acts like a channel line.
Exactly, yeah.
And not exactly the channel line, but this was a way to keep it sort of fixed. And you can see that when we hit here and here, that sort of triggered pullbacks. And here we did it again, and this time really actually sort of closed above it. And we weren't too surprised. And last week it sold off and came in here. It basically came to the 50-day line last week, came back up, but this week we came back a number of times here. We came down to the 50 line, closed near the lows, rebounded, but it was on lighter volume. And we tried to get back above this 21-day line, and which had been the floor and now looks like it's the ceiling. And we reversed really nasty. That was a nasty reversal day. Today we sold off, definitely closed below the 50-day line, though we did close well off lows, but it was still not a great day as well.
Yeah, so essentially this whole thesis with the regression lines has been violated. So last week marked a definite character change. So like you said, the increased volatility that we saw this week as well, not all too surprising. We were saying that coming down, our lines in the sand were, of course, first and foremost, that 21-day, then that half standard deviation of the regression line, and now the 50-day, and now we're below that. So where does that leave us off?
Well, first off, for those who are familiar with market school, the power trend is off. Now, usually that's when the 21-day goes below the 50-day, and that looks like we're headed toward that another week or so. But we violated it because there's a so-called, we sort of have our own little circuit breaker. It fell below the 50-day line, and we fell 10% below that. And so that combination, that sudden plunge, sort of took the power trend off for now. As for the market rally, we went to market under pressure after this Tuesday sell-off. We're still debating what we're going to be doing going forward. It was definitely not great action this week. And I think, for investors, if you're buying it, this is sort of the worst possible market, a choppy market up and down, because it's just enough to tempt you to come in. And when we were on Thursday morning, it was looking pretty promising. But, you don't necessarily, but then we reverse lower. And so it's really hard to make headway. It's sort of the worst possible market to be in for a growth investor.
Right. So that is why we had been advising when we were getting a little overheated, starting to hedge, protect profits, really keep a tight leash on your leading stocks and grade all of your holdings and get rid of ones that maybe you had smaller gains on. Make sure you're not having a gain that's turning into a loss. But Ed, can we look at this on a weekly chart to give us that weekly perspective? Because again, last week, there was a notable character change in the market, and it looks like that change in character to the downside is continuing this week.
Yeah, and despite all the ups and downs, we closed definitely in the lower half of the range. You can see from this candlestick. And it's just a situation, not only is it hard to make headway with your stocks, if it's tiring to be, mentally to get cut up a bunch of times. You really don't want to go through this. The worst possible situation is if you fight and fight and fight and you lose money during the next few weeks. Either we go sideways or we go down, and then you sort of give up and don't pay attention when the market really does go forward. I mean, you want the market trend to be in your favor, and right now it's not. We don't know exactly where the market's going to go, but it's not been going the right way the past couple of weeks.
Yeah, that's right. And then we also want to look at this on a monthly chart. We like looking at all different time frames, whether that's daily, weekly, or monthly, to really give us the perspective of where we are in the overall trend. And last week we were, this is yet a further signal of how overheated that we were getting in the market, and really erasing the gains from the last month as of now.
Yeah, and you can also see just how unsustainable this rally. It's fine to go up that for a while, but going at that pace was unsustainable. And maybe that's it. We are not going to go back to that channel line, that regression and the channel lines, however you want to see it. We may not really return to it. I mean, we don't know, but ideally we'd go sideways or and start moving maybe more at a pace like this, actually following this trend line. That's pretty steep, actually. It's a pretty good angle. It just isn't almost so straight up that we were seeing. So just a lot of signs there. Another reason to think that, we need to pause right here. But I think it's
Yeah.
also good to take a look at the S&P and take a look at
Let's
this
do it.
weekly. Um,
With the
so
the spiders ETF that tracks the S&P 500. What is this telling you? We're pulling back to that 10-week level here.
Well, it's another sign because it's obviously the S&P is being tracked by has all these big techs in it as well, and those were getting pulled down, and that wasn't a great situation. It's nice that it held support, but that's coming under pressure too, and so
Mhm.
that's just a situation to watch on that. Definitely negative reversal last week, closing at the low, low of the week, basically, all in all, 27% of the closing range. So like the Nasdaq, definitely in the low end. The trend is just going against you, and even a lot of non-techs, some of them were holding up better, but they weren't like most of them were not shooting up. You weren't seeing a lot of big gains out, and so it's just not a whole lot of risk reward. There's a lot of risk and not much reward right now.
Mhm. Yeah, and earlier in the rally that we saw starting in early April after the coronavirus crash, some pullbacks throughout those last couple of months provided buying opportunities. But what we were saying about this time, this pullback, or really a plunge off of highs, is a little different. You don't want to be thinking, oh, now all of these high flying stocks are on sale. These are really not proper entries that we're seeing for a lot of stocks. When you're seeing a lot of that selling pressure, you don't want to be trying to catch a falling knife. In what you really want to be doing during this time is building your watch list and waiting for those new proper setups to where you're increasing your odds of success instead of fighting and having trouble like you've been talking about.
That's exactly right. And, better to wait till we're above the 50-day, living above the 21-day. That's the situation you want to be in, for as an investor. But yeah, building the watches is exactly what we want to be doing.
Exactly. Well, let's take a look at a couple of names, perhaps, for the watch list. Target is on our radar. Finished with a gain this week, a slight gain. But what do you make of what we've seen with this pullback and a little bit of a bounce off of the 21-day for Target?
This is really great. I mean, it broke out, then it had a huge gap up on earnings. And yeah, it's given back some of that, but it's really been gradual. It's nice and calm. There's no violent real action. I mean, this was the worst day of the whole bunch, a couple in here. But bouncing up the 21-day, in a more aggressive market, you'd be thinking, oh, maybe I could try to find an early entry. But hey, this might be just be forming a nice base here. We're seeing a lot of discounters acting fairly well. And so this is definitely one of the top ones. You can see the growth we've been having. Obviously, there's some special cases, but there's probably some permanent shift towards e-commerce, digital sales, and Target is doing very well with that.
Hmm. Yeah, it is. And just a reminder for those of you out there, when we're talking about proper bases, those take a number of weeks to form. So, up until we saw this character change in the market, we'd seen a lot of shorter consolidations or maybe 3 weeks tight patterns, but not really these full-fledged bases. So now it looks like maybe that's the opportunity that we're getting now. So we'll keep an eye on Target. And elsewhere, we want to check in on Chipotle Mexican Grill, CMG. For speaking of tight action, which is good. We
Yeah.
love seeing tight action, especially when we're in a volatile market. That's a for sure sign of strength here. And we did see Chipotle forming a 3 weeks tight pattern as of the end of this week.
That's right, and it'll show up in a couple of hours. It usually those things come in at 3 o'clock, but 3 weeks tight, it's when it trades within 1 to 1.5% of the prior week for 2 straight weeks. It actually rose almost 1% last week. It just fell a little bit more than 1% this week. And as you say, the Nasdaq had 2 negative weeks, the S&P as well. So this is really positive. Yeah, the earnings were weak in the last couple of quarters, but that's because of the whole coronavirus shutdowns. The e-commerce is great. The digital sales are booming. Stores are reopening. Analysts are expecting, definitely a recovery, and especially next year. Relative strength line, record highs. It's been booming the whole time.
Mhm.
It's just a lot of strength here. You wouldn't know. You look at this chart, you wouldn't know that there's any kind of pullback at all in the market. This looks like a normal week for
Mhm.
Chipotle.
Yeah, it does. So definitely at the top of the watch list. We're going to keep our tabs on it and see what happens with overall market conditions next week. But no matter what, you can be sure that we're going to be prepared for no matter what happens in the market. And at the very least, we're going to be continuing to build our watch list. But Ed, to kind of tie everything up and put it all together, what should investors be thinking about over this weekend and as we head into next week?
Well, I think, what if you have positions, like if you made recent buys, you might be thinking, well, should I be getting out of them? Because probably you're taking losses on them. I mean, or even if you're not taking a loss, you think, well, do I really want to be holding this? And you may want to game plan some of your big winners. If you think, oh, I really want to hold this, well, like which ones do you really want to hold? If the market falls further and we clearly go into a correction, it looks like we're not going to come out of it right away. Do you want to hold all those stocks? Do you pair some of them? Do you get out of some of them? And then finally, you build the watch list for the next uptrend. Those are the kind of things you want to do. This is more just, defend and prepare. This is not an attack mode. This is defend and protect, to protect and prepare.
Exactly. Yeah. So while further weakness could be ahead, we do always want to remain flexible. That is also something that is very important as well. We're taking our cues from the market day by day. So something may happen and change our minds. You never want to be too stuck in your ways and have that crystal ball prediction. That's not what we're about here, but we are just reacting to what the market is telling us and remaining flexible.
That's right.
All right, everyone. Thanks so much for tuning in. We hope you had a great week, and we'll see you right back here on Monday, including IBD Live, where we're going to break down the latest for market conditions because we know it's a more volatile market now, and it was a very key week this week. We did close below that 50-day on Friday, so we'll have to see what next week brings, and we'll see you then.